Welcome back. Welcome back to another episode in accounting. Alright, today we'll be looking at the topic balancing of accounts. Yes, balancing of our accounts, right? Several businesses, all businesses they use account. Account is one of the important tools in a business, right? But what do we mean by balancing of account, right? You don't have to be an accountant to know that simple mathematical term, right? When you balance out something, you make both sides equal. Alright? So when we balance out our account, we want to make both sides of the account equal. We want the debit side to be equal with the credit side, or both sides should agree. So whatever amount is on the debit side, it should agree with the amount on the credit side. Alright? Further, why balance of account? Right? It is important to balance of account because businesses have several different accounts. So they need to know how much is in the account, how much they owe to other businesses, right? And also how much other businesses owe them. That is the purpose of balancing of accounts. So clearly you can see why it is important to balance off accounts. Okay? Alright? So we are going to be doing an activity. We're going to balance off our account, and then from that we're also going to extract our trial balance. Alright guys? So get your pen, your book, and ready as we're going to work this through. Welcome back again. So we're going to be looking at balancing off account and closing account. All the accounts will be balanced off, while some will be balanced off and closed. And as we go through our activity, you will be able to make the distinction of the accounts that are balanced off and the accounts that are balanced off and closed. So here we have some transactions for G. Powell, right? It says he started business with $25,000 in the bank, right? And we know that $25,000 that he started with is called capital. So two accounts are affected there, the capital account and the bank account. If you have noticed, I've already done up our account for time and for space. All right, so here we have in his capital account, the bank was credited with $25,000, while in the bank account, the capital was debited with $25,000. Why did we credit the capital account? Remember capital? Remember capital is what the business owes the owner. So it's like a liability, right? So that is why we credit the capital with $25,000, right? Our next transaction is July 2, bought office furniture for $1,500 by check. Two accounts are affected there again. We have the bank account and the office furniture account. So the bank account was credited with $1,500, while the office furniture was debited with $1,500. So clearly you can see that the bank account decreased while the office furniture increased. All right. So our next transaction that we have here is on July 3, bought machinery for $7,500 on credit from Planners Limited. Bought machinery for $7,500 on credit from Planners Limited. Two accounts again, they have been affected. We have machinery account and we have planners account. All right, so machinery account is an asset account, right? That account has was increased $7,500, while planners account is now a liability account, right? It's a liability account. So we credit planners account with $7,500. All right. So our next transaction, his next transaction happened on July 5. He bought a motor van for $6,000 by check. All right. So two accounts again have been affected, right? Motor van account and the bank account. The bank account is an asset account and it decreased with $6,000. So we credit that amount in the bank account. While the motor van account increased, so we debit that amount in the motor van account. All right? Our next transaction is on July 8th. Sold of some of the office furniture not suitable for the firm for $600 on credit to J. Walker and Son. All right, so let's see now. Two accounts have been affected. We have J. Walker and office furniture. All right. So our next transaction is on July 8th. Sold some of the office furniture not suitable for the firm for $600 on credit to J. Walker and Son on credit. That means J. Walker did not pay immediately for those furniture. So two accounts have been affected, J. Walker and office furniture, right? So clearly we will see that office furniture decreased even though it's an asset by $600. So we credit that amount. While J. Walker increased with $600, so we debit J. Walker's account with that amount. All right? Our next transaction is on July 15. Paid the amount of $7,500 owing to Planners Limited by check. All right? So two accounts have been affected again. Let's see. Planners Limited and bank account. All right? So bank account again decreased with another $7,500. So we credit that amount in the bank account, while Planners Limited increased with $7,500, right? So we debit that amount. All right? Our next transaction is on July 23rd. Received the amount of $600 due from J. Walker in cash. Two accounts again have been affected, J. Walker and cash. So J. Walker paid the amount $600. So J. Walker account has been credited with the $600, while cash account, which is an asset account, increased with $600. So we debit that amount with we debit the cash account with $600. And our last transaction here is July 31. It's bought office machinery for $2,800 by check. And by this time, you are able to identify the two accounts, office machinery and check. So again, office machinery decreased by $2,800. So we credit bank account with $2,800, and we debit machinery account with $2,800. All right. So, having entered our account, we are now going to be balancing off all our accounts. All right. So let's go. The capital has $25,000 in there as at July 1. How do we balance off our account? We find the difference of both sides. That's the first step. The next step, we add up both sides of the account. Then the third step is we take away the smaller amount from the larger amount to find the difference, right? So the side that has the smaller amount, after we have discovered the difference, we place that amount on that side to make both sides equal. So let's go to see how we balance off our account. So our capital account only had one transaction. So in order for that account to be equal, there's nothing to add or nothing to subtract. So what we do, we're going to be carrying forward the amount that was there originally as at July 1. So when we are balancing off our account, we use the last month, the last day in the month to balance off our account. So we said on the debit side, we carry that figure from the first day. So on the debit side, we said July 31, balance CD. CD means carry down. Now we carry down the $25,000, right? We draw our double line, right? So as you can see, $25,000 on the debit side, $25,000 on the credit side. Both sides are equal. So this account has been balanced off, right? Following that, we have to carry forward or bring down the balance that was on that account at the last day of the month. So the last day of the month was $25,000. The first day of the following month, which is August 1 or 1 August, we said the balance BD or the balance brought down is $25,000, right? Please make a note of that. $25,000 in the capital account as at July 31 and as at August 1. Our bank account had a debit entry of $25,000. But on our credit side, there are some transactions that took place. All right? So by all indication, when we add up both sides of our account, clearly we can see that our account does not balance, right? So we need to make it balance. So we add up 1,500, 6,000, 7,500, and 2,800, right? When we add up all of that, right, our account does not give us $25,000. So we need to find the difference. So the difference of 6,000, 7,500, and 2,800 is $7,200. All right? So we write the last day of the month again, even though it was used before. Balance July 31, balance CD, $7,200. So when we add up all of this amount, it gives us $25,000. Notice where my lines is, right? The lines, both lines, the debit line and the credit line, they are on the same level, right? They are on the same level. So I have my $25,000 there. However, on August 1, we need to carry down the balance. What was the balance? After all the transaction that happened in the account throughout the month of July, I'm certain after paying for office furniture, motor van, paying a creditor, buying a machine, we don't have $25,000 remaining in our account, right? So we need to find how much remain in our account. And clearly at July 31, $7,200 remained in our bank account. An easy way to remember this, whatever was the balance CD the last day of the month, 7,200, becomes a balance BD, balance brought down, for the first day of the month. Our next account is office furniture. All right, so on July 2, they receive some furniture for $1,500, right? However, 1,500 and 600, there's a discrepancy, there's a disparity, right? So the balance must be equal to the greater amount, which is $1,500, right? So the difference of $1,500 and $600 is $900, right? So because the credit side has the less amount, we write the balance or the difference on the credit side, which is 900. So when we add 900 and 600, we now get $1,500, right? We bring down the balance the first day of the following month, which is 900. Here we go again. Whatever was the CD for the last day of the month, it becomes a balance for the first day of the following month. Our machinery account, we had some transactions there, right? And when we add up the transaction on the debit side, we get $10,300. There were no activity on our credit side, so all we had to do was to bring over the amount that was on the debit side over to the credit side to make our account equal. So there were no transactions that happened on the credit side. Planners Limited. On July 3, the machine was credited for $7,500 on July 3. However, on July 15, Powell paid planners by check $7,500. Realize now I don't have a balance CD. Okay, so there's no balance CD or BD on planners account. So this account is closed. This account is balanced. All right. So there are no outstanding amount on planners account, right? So planners account has been balanced off and closed, right? So no amount has been outstanding. It has been balanced off and closed. Our next account, which is a motor van account, all right? So on July 5th, a motor van was purchased for $6,000 by the bank, right? There are no other activity that occurred in the motor van account, all right? So just one motor van was purchased, all right? So we need to make both sides equal, all right? We need to make both sides of the account equal. So we bring over the amount on the debit side to make it equal with the amount on the credit side, right? And the same amount would be for the first day of the following month, right? J. Walker and Son account, which is our next account, July 8th, office furniture was purchased on credit. July 23, J. Walker paid cash for those furniture. Again, J. Walker account has been balanced off and closed, so he doesn't owe anything, right? So notice he credit some office furniture for $600 on July 8th. On July 23, he paid cash for those furniture. So this account has been balanced off and closed. And our last account is a cash account. Here we have J. Walker and Son was paid some money on July 23, right? There are no other activity that happened in the cash account. So we just bring over the total that was on the cash account from the debit side to the credit side, 31 July, balance carried down. The balance carried down is $600, right? And we use that same balance carried down for the first day of the month, which is balance brought down, $600. All right? So now we are going to be extracting our trial balance. From all these activities, we're now going to be extracting our trial balance. All right? So I want you to work with me now. All right, so because of space, I have a smaller board now. So we're going to be extracting our trial balance after we had balance of our account. So as you can see, the first one is a capital account. And the balance on the capital account was $25,000, right? And it is a credit balance. So we say $25,000. Our next account, which is the bank account, had a debit balance of $7,200. Our next account, office furniture, and it had a debit balance of $900. Our next account is machinery. It had a debit balance of $10,300. Our next account is motor van. Notice, not planners, because planners account is closed. So it's motor van, and it has a debit balance of $6,000. Our last account is a cash account, and it has a debit balance of $600. So we're going to balance off our account. We're going to total our trial balance to see if it agrees. Remember, whatever is on the debit side should agree with whatever is on the credit side, right? And just to refresh you, remember, capital carries a credit balance. Bank, office furniture, machinery, motor van, and cash, these are all assets account, and they carries a debit balance, right? So whatever side, when you balance off your account, whatever side the balance BD falls on, that is a side, the same side you will place it on in your trial balance. So let's check. 7,200, 900, 10,300, $6,000, and $600, right? This adds up to, so down here we write total, and this adds up to $25,000. We bring that down because there is no other activity there. We draw our double line, and there you have it, our trial balance after balancing off and closing our account. All right, so go ahead, get practicing, and continue to practice.